What in the world is going on right now with tariffs and the economy, and does it spell doom and gloom for small business owners? In this video, I'm going to talk you through what has happened over the last several days with tariffs being announced and the potential impact on the economy, including whether or not we might be headed into a recession, what that means for you as a small business owner, and I'm going to make a case for how you can thrive as a small business owner even in an economic downturn instead of just surviving. If you're new around here, I am Sarah. I am a CFO and business advisor for primarily service-based businesses. I'm also a CPA and I have a business degree with a focus in finance and economics. So this is stuff that I think about and talk about with clients on a regular basis. And I think it's really important for us to get an understanding of not just what's happening, but just the overall context of the economy, how it's going to impact your business or how it might impact your business, and what you can do about it today to get yourself ahead. First up, let's talk about what has happened over the last several days and give you some extra context behind what the news media is talking about and putting in your face if you turn on the TV or read any news articles. And I'm recording this on Monday, April 7th. So by the time this video comes out, I'm sure more things will have happened, but I think that the overall themes that I'm going to talk about are going to be relevant no matter what happens, because basically I'm just expecting uncertainty. We're going to expect the unexpected. So last Wednesday, the Trump administration announced that they were putting tariffs on basically every other country in the world. And I think it's really important to understand what a tariff actually is. So a tariff is a tax that a person who imports goods from another country pays when they import the goods. I think it's really important to understand that the person or entity that pays the tariff is the person here importing the goods, not the other country. Because I think what we see implied is that putting tariffs on other countries is going to be detrimental to them and they're going to be the one paying it, but actually it is the business owner or the importer who's bringing the goods in. So let's say they buy a crate of stuff from China. When they go to import that good, they're going to have to pay a tariff of whatever percentage on the value of the goods that they're importing. I think it's really important to understand that, like with any tax, a tax is an incentive. So the government taxes things or gives you tax breaks on things to either incentivize or disincentivize you to do certain things. For example, retirement accounts are tax advantaged because the government wants to incentivize you to put money into retirement so that when you are older, when you're in retirement age, you still have some income and you don't have to basically live off of government provided stuff. The government also gives tax breaks to small businesses because they want to encourage people to run small businesses because small businesses help boost the economy and provide jobs. So similarly, a tariff is a tax that they're putting on imported goods to disincentivize people from buying stuff from overseas versus buying them from within the United States. So the Trump administration is basically saying that they want to restructure the global economy and bring more manufacturing back into the US, which manufacturing, we used to have a lot more manufacturing in the US, and then for various reasons I'm not going to go into because it's a long history, but basically since World War II, we have had manufacturing get moved to other countries that have much lower costs than the United States, to the point where we now buy a lot more goods from other countries than other countries buy from us. So the Trump administration is basically saying, we want other countries to come buy more stuff from here, or we want us also to buy more stuff from here. And so we're going to put a tariff to disincentivize people from buying things from overseas. Now, I'm going to be super clear. I try to stay, when I present things like this, I try to just present the facts and not present any bias. It's really hard not to when we talk about how these things are potentially going to impact small business owners who I care about a lot. So I do want to say up front, I've never voted for Trump, would never vote for Trump. I also at the same time don't classify myself as any sort of like super far left person either. But there's a lot of things that I really strongly disagree with on a moral level that the Trump administration does. So I just want to say that first and foremost. However, do I agree on some level that there might be a benefit in not buying as much cheap stuff from other countries? Yes. Is this the best way to go about it? I don't think I'm qualified to make that call. It feels like it is going to be really tough on a lot of people, and it feels like there could potentially be other ways to accomplish the end goal, but that is not something that is within my control. So last week, tariffs announced on Wednesday, basically on every other country, and through the weekend, we were kind of waiting to see if they were going to stick to it. Is this a negotiation tactic just to show up and make this big move and try to force the other countries to come to the negotiation table? Or is this going to stick long term? Still don't really know the answer to that, but I don't get the sense. The administration is basically saying in various channels, even on like Trump's social media platforms, basically saying like to the American people, buckle up, we're going to have to take some medicine, and this is going to be, you have to have patience and wait for this to play out. There is general consensus from a lot of different foundations and people and think tanks that study the economy that putting tariffs on this scale especially will be inflationary to the economy, meaning prices are going to go up because we import so much stuff from elsewhere. We also are not going to be able to move manufacturing facilities overnight into the United States and have all of these jobs created and filled in the United States overnight. And so generally speaking, I've seen anywhere from an average of $2,000 to $3,000 of an increase is projected for the average American household's spending, right? You have to keep in mind too that this is coming off of a few years. We're back in 2022. We had around 9% inflation. 2023 was 4 or 5%, I think. 2024, it did come down closer to 3%, 2 or 3%. But in general, we've had several years of pretty high inflation. And so saying that we're going to potentially see even more price increases is causing banks like JP Morgan, for example, came out last week to say, we think that between inflation and global trade wars, basically shaking everything up, they put a 60% odds of there being a global and US recession in 2025. Before last week, I think they had increased it to like 40% back in March. Other banks also increased their odds, although they were not as high as JP Morgan. So that's the one that got reported most widely. But basically, they're saying we now think that it is somewhat likely, pretty likely that we'll go into a recession in 2025 based on what we're seeing in the here and now. Let's pause and revisit what is a recession. So there's different broader definitions of a recession, but at a high level, a recession is 2 quarters consecutively of GDP decline. So GDP is gross domestic product. Basically, the government will look at the total output of the economy in the US, and that's our GDP. Typically, we see growth every year. To see a recession, to see decline for 2 consecutive quarters is an indicator of the economy pulling back some. Now, if we think about any cycle, even in your business probably, you don't necessarily expect to see growth every single quarter, every single year. So it is important to understand that recessions are a completely normal part of the economic cycle and can help correct imbalances. And that doesn't mean that it doesn't suck to go through a recession, reminding myself to keep positive language as much as possible. But the reality is recessions can be tough for a lot of people, right? But they're completely normal parts of the economic cycle. So the last recession that we saw was in 2020. It was a pretty short one from February to April 2020, driven by COVID. Then the last one we saw before that was the Great Recession, which ran from December 2007 to springtime 2009. So that one was the longest period of recession that we had seen since the Great Depression, which is why that one was called the Great Recession. So the last one caused by COVID, the Great Recession caused by the housing crisis and banks failing because of their subprime mortgage lending, et cetera, et cetera. One other thing I want to point out is that the news is talking a lot about the stock market tanking on both last week and today on Monday. I'm looking at the S&P 500, which is an index that is pretty broadly used of the 500 largest companies on the stock exchange. They basically take a weighted average of their stock prices and put it into this index so that we can get a sense of what the stock market looks like on a more macro level. So sitting here right now, as I'm looking at it around lunchtime, it is right above $5,000 as the index price as of today. Last week, so the tariffs were announced on Wednesday. So on Tuesday, before the tariffs were announced, it looks like it was around 5,600. And then you can see the price dropping as we go through Thursday and then even steeper on Friday. I think it's really interesting to think about how stocks are priced. Stocks that have been sold like after the initial public offering are priced based on what the buyer and seller agree on is the price of the stock. They put a value on the stock based on the projected future, based on multiple things, but simplistically, the projected future cash flow that they expect to get from owning a portion of that business. The cash flow is going to come from either an increase in the value of the company, which would increase the stock price, or from dividend distributions that the company would make to the stockholders. They sit back and they say, we think that this company is going to give me this much future cash flow, and so I'm going to discount it back into present dollars to get rid of inflation and come up with a price. This is a really simplistic way of talking about how stocks are priced. So when we see the stock market tanking, why is it tanking? I think it's really interesting to look at, if we go back and look at like 5 years. Number one, even with the changes, even with the decline that we've seen over the last few days, the stock market is still up 80% over 5 years. If I actually scroll my finger back, so we're at about 5,000 today. The last time we were at 5,000 was in February 2024. So basically, in the last couple of days, we have wiped out the gains that were made in the last about 14 months, which is a lot, and that's obviously not good. But we know that if we zoom out and actually look at the max of this index, if we zoom out, the stock market grows over time. So if you kind of scroll through here, we can go back. So around 2000 was the dot-com bubble burst, which led to that dip. Then we scroll forward, we can see where the Great Recession happened. Then we scroll forward, we can see this short but steep drop in 2020 from COVID. Then we can see this other one in 2022 that was really the last time we had pretty high inflation numbers coming out, and the recession was being talked about a lot back then. And then we come up here and we see this drop here. Over the last few years, we've had really big returns in the stock market. Actually wrote it down, 2023, 26% return on the S&P 500. And then in 2024, we had a 25% return. So I'm not saying that like the stock market tanking is a good thing, but also at the same time, like we've had some pretty high returns. And so the potential for this to mean that all of a sudden, all of these companies are just now worth nothing, I think is just not the right way to look at the stock market declining. So with that context, why did the stock market tank? Well, I'd say there's probably two reasons. Number one, investors are looking at all of these companies who now are going to have less potential future cash flows because of tariffs. So their prices, their cost of goods is going to increase. There's also the potential for buying, consumer spending to decrease because of the price increases that are almost definitely going to get passed on to the consumers. There's also a lot more risk in what's going to happen. There's a lot of uncertainty. And so like if you could take two different shares of two different companies and say this one has a lot more risk due to the industry that it's in, due to the changes that are happening, and this one has a lot less risk, all else being equal, you're going to pay more for the less risky one because the outcome is more guaranteed as compared to the one where there's more risk. Does this spell doom and gloom for small business owners? The reality is that there's a lot of uncertainty and no one can say for certain whether or not businesses are going to go under. I do think that if we look at different industries, product-based businesses, people who rely heavily on goods that are purchased from other countries, are going to be more severely impacted more quickly. That can then trickle through if a recession does happen, it can trickle down into other areas of the economy as those companies first impacted start laying people off, as consumer spending starts decreasing across the board. And so it is very possible that we could go into a recession. But I think what I want you to take away from this video, aside from having an understanding of what's happening, is that you do not have to suffer even in an economic downturn. And in fact, you can actually thrive during an economic downturn with the right mindset and by taking a very entrepreneurial approach to running your business. So I think first we need to understand, though, that uncertainty and change is really hard. And I also would say it's really hard to sit here and watch the government doing things that we know are going to put a lot of people in a bind and to not feel some feelings about it. So I think the first thing we need to acknowledge is that it is totally valid for you to be feeling whatever you're going to feel. It is totally valid for you to feel uncertainty and fear about what the future holds. What I don't want you to do, though, is to wallow in it, to doom scroll all the time, because the social media algorithms are going to keep feeding you more and more of that really negative stuff if you keep watching it, which is just going to put you in this echo chamber that's going to be really hard for you to break out of it. And I would argue that staying in this place where you have fear and anger, while they're valid emotions, they're also not productive emotions, meaning it's going to be hard for you to show up and be the best version of yourself that's able to ride the wave through any sort of tough time, for you to be the type of person that you need to show up as for your family, for your clients, for your community, if you are stuck in those feelings. So I would say, yes, feel them, but let's do our best to process the emotion and regulate our nervous systems so that we can not be so negatively and so steeply impacted, so we can actually do the work that needs to be done. I also think it's really important to understand that the future is never certain. I think right now we're sitting here and we have more certainty about future uncertainty than we historically have had. But the reality is there's never been a second of your life where the next second was 100% predicted. There's no time that we can say for certain this is going to work out or this is not going to work out. And so what we're faced with is really nothing new. I would also bring up the fact that throughout the course of humanity, people have gone through a lot of really hard things. And I would say going through hard things is part of the human condition. People have gone through some really tragic things, and yet we're still here. We're resilient. We can absolutely make it through. And I really want you to hear me when I say what I'm going to say. So lock in, okay? There is no universal law that says that just because an economic downturn is coming or may be coming, just because a recession may be coming, you have to suffer during tough times, that you have to feel like crap during tough times. You can still deal with hard things and you can still find peace and joy and love and happiness and all of the things. We have to understand, I think, that these external circumstances do not ultimately have power over the way that you choose to experience your life. I think that when you give up your own autonomy to choose how you experience your life, you're basically letting your inner 5-year-old brain take over, your inner lizard brain take over, right? Instead of being the highest and best version of yourself that says, you know what? Yes, these are hard. I'm going to have to do some hard things, but I can do it. And I'm going to choose to still find joy and happiness and do things that I love and make an impact on other people despite them. So remembering what is in your control and what's not. The government putting tariffs on anything is not in my control. The government passing laws about anything is not in my control. Yes, I can call, I can email, I can protest, I can do the things, but ultimately I'm not the one who's writing the law. I'm not the one who's doing those things, nor will I ever be. And so what's in my control is what I choose to do in response, is what I choose to think and what I choose to do in response to the circumstances that are happening around me. Somebody could go through a recession that may or may not be coming, right? And have a really tough time. And they just feel like their life is miserable and they let it suck them down, right? Another person can go through the exact same circumstances and choose to keep showing up and choose to keep finding all of the good things in life and just staying resilient. So I'm going to ask you which one you want to be. Do you want to be the person who doesn't live up to their potential because the external circumstances they're allowing the external stuff that they are not even in control of to bring them down? Or do you want to be the type of person who says, you know what, this is what's in my control and I'm going to do the best. I'm going to show up and be the best person that I can be within the realm of what is possible for me, what's available for me to do. I actually think this is a really good indicator for me when I see people who I know are going to kill it as a business owner and people who I know are not. And I'm usually not so blunt when I talk about these things, but I think it's really important. I see the successful people, I see the wealthy people, the ones who are doing the thing, are the ones who find opportunities. I would say they're the ones who find opportunities when the economy is great. They're the same ones who find opportunities when the economy is bad, and they find opportunities when the economy is neutral, right? Versus people who don't live up to their potential. Instead of finding opportunities, they find excuses. And so they blame all the external circumstances for why they haven't been able to do the things that they want to do without taking responsibility for what's within their control to influence, which is yourself. Basically, what's in your control is only yourself. And the sooner that you step up and take that control and make the choice to stop seeing all the reasons why you can't do something and to say, what are all the reasons I can, and let me do those things, the sooner you're going to have the things that you want to have in this life. And so what does that mean for business owners who may be going into a time when their business model doesn't work anymore? You can either blame the external factors and say, you know what, I'm failing, I'm shutting this down, I'm just not cut out to be a business owner, whatever you choose to think about that situation. Or you can start now and say, you know what, I'm going to be proactive. I'm going to be entrepreneurial. I'm going to be creative. I'm going to get scrappy, and I'm going to figure out a thing that works. Even if what works in this new, economic reality that we're facing is not what I originally set out for in my business. So it might look different, right? You might have to change the way that your business runs in order to keep it going. But that doesn't mean that you're a failure. That doesn't mean that everything has to be doom and gloom. Oftentimes, actually, I think when these things happen, if you have to pivot or if you have to shut your business down and try something new, if you have to let go of the products that you have and create new ones, you just never know when the new thing that you created is actually going to be 1,000,000 times better than what you had before. There's this thing that I find really helpful to remind myself of on a regular basis called the law of polarity, which basically means that everything has an opposite. For every action, there is an equal and opposite reaction, is a science rule, right? So the law of polarity basically says that you can't have good without bad. You can't have hot without cold. You can't have rich without poor. You can't have light without dark. Everything has an opposite. And so I think in every experience that we have, you have the opportunity to both experience the hard stuff, but also to get some amazing stuff out of it. So I think if we want to take this approach of how do we thrive, I think it starts with this mindset that we have around, you know what, I'm going to think about what does it mean to be the type of person that I know is going to ride that wave, that's going to be successful, that's going to find the opportunities. What does it look like for me to be that person? And what are the things that you can start doing right now to cultivate that reality for yourself? So I'm going to finish up this video with a little bit more like tactical things, tactical reminders. Everything I'm going to say is stuff that we probably need to be doing in good economies and bad ones. It's just good business practices, but I think going into what could potentially be a time of a lot of volatility, I think they become even more important. So I'm going to give you 6 things that you can start doing right now, in addition to answering that question that I just asked about what's it going to take for you to be the person who finds opportunities in order to help your business and you and your family weather whatever comes. Number one is avoid overextending yourself. So knowing that we're going to go into a time that has more volatility, volatility means more risk. I'm going to be asking, how can I de-risk my business? How can I de-risk my finances? So I would say avoid making investments right now that are going to overextend you. What I mean by that is we're not going to make an investment where it's like, you know what, I'm going to put all the money that I have into this thing and I need it to work out. And if it doesn't work out, I'm basically going to go bankrupt. We maybe don't want to be making those types of investments right now, because with more risk in the economy, the odds of that thing working out probably just dropped a little bit, right? So let's not overextend ourselves. Let's not take on a lot of debt. Let's make sure that we're restructuring the way that we run our business, and we're restructuring the actions that we take to maybe bring down the risk level a little bit. And that's not to say that you can't make new investments during an economic downturn. I'm just saying don't make that your only investment so that you are then overextending yourself and potentially putting yourself in a bad situation. Second is review your spending. If you have not done that in a while, both for your business and personal spending, I think now is a really great time to review everything that you're spending your money on. Pull up your financials, pull up your bank statements, see what you can potentially cut out. If there's things that you can go ahead and get rid of, do that. If there's subscriptions that you have, if there's team members that you're not fully utilizing, whatever it is, if it's not giving you a return, if you're not fully using it in your business, or if you don't really need it in your personal life, now's a really great time to start cutting that out. So that you can do number 3, which is to build up your cash savings. You're going to hear people talk about having a war chest going into a downturn because for multiple reasons. Number one, having cash to make sure that you can keep paying the bills if your income dries up, if your sales drop in your business, if your spouse or partner ends up getting laid off from their job, make sure that you have minimum 3 to 6 months of cash on hand so that you can keep the lights on, right? You can keep paying the mortgage, you can keep buying groceries. Economic downturns are also really great times where if you have the money for it, if you can build up that war chest, a lot of things are going to cost less. Investments are going to cost less, right? The stock market being lower means I get to buy stocks at a discount when I know that they will recover over time. Real estate might cost less in certain markets. We'll have to wait and see like exactly what assets end up costing less, but generally in an economic downturn, you can buy stuff for a lot less money. It's a good time to make an investment if you can hold it for the long term. It's not a good time to make an investment if you need that cash. Like in the next couple of months, it's probably not a great time to be putting that money into the stock market or into something trying to trade and make short-term gains, because with the volatility being where it is, you could put your money in and lose it. Kind of going back to number 1, don't overextend yourself. Number 4 is to diversify. And so diversification means don't put all your eggs in one basket. Thinking about personal investments, like don't put all of your investments into 1 or 2 stocks. Try to put them into different types of funds. I'm not going to tell you what to invest your personal money in, but don't put all your money into like one stock. Within your business, it could mean diversify the channels where you find clients, diversify the industries that you work with a little bit, so that if you're working with an industry that's going to be hit hard by tariffs, for example, like maybe go ahead now and start trying to find clients who are not going to be so impacted by it. Just don't put all your eggs in one basket so that if that thing goes down, your whole business gets impacted. Number 5 is knowing that if the economy is going to tighten up, buyers are probably also going to be colder. The sales cycle could be longer. You're more likely going to hear people saying, I got to think about it. I'm not sure right now. It could just be harder for you to close clients than what you're used to. So knowing that, thinking about, are there ways that you can reshuffle your offer structure? Are there ways that you can offer different price points? Not a lower price point for the same amount of work, but are there ways that you can offer smaller bites for people, lower price points? Are there things that you can sell that people are going to buy whether we're in a recession or not? Are there ways that you can sell to people who are not going to be as heavily impacted by a recession, by tariffs? Ultimately, I think, how can you make sure that you are building trust with people? Because I think when we're going into a situation with a lot more volatility, people want to make sure that they're buying stuff from places that they trust that they're going to get what they're paying for. And then my last thing is just a reminder. Number 6 is to get scrappy, be entrepreneurial. Don't just lay down and take it. Like, start thinking now about ways that you can get creative, that you can be the entrepreneur that I know that you can be. You're smart, you're strong, you're capable. Like, there's no reason why you can't figure something out, even if it means that your original business model that you had does not work in this new scenario with the tariffs that you have. Be scrappy and try to be creative and try new things and figure out, is there a way that you can find an opportunity to keep going even when the economy is not as great as we want it to be. All right, y'all. So we talked about a lot, and I really hope that it was helpful to not only get context for what's happening, but also just to shift the way that you think about a potential economic downturn, because I want us to truly believe that, yes, even when things get hard, we are not required to suffer. We're not going to be forced into having a terrible time. I think we can look back at the recessions that we've been through. I know a lot of my audience is millennial age. And so it's easy to go back and think like, oh my gosh, like we're going to go through another great recession. Like that was really hard on my parents. And that was really hard on me trying to get a job coming right out of college. But ultimately we made it, and we saw that there were industries that thrived. There are, were companies created during that time. It doesn't have to be the end of the world. Okay. On that note, if you have questions or anything else you would like to see us dig into, leave a comment under the video, and I will see you back next week.